We're going to talk about specific things today: Social Security, the stock market, retirement in general, long-term care, taxes. We're going to talk about all that stuff. And really, should you worry about any of that stuff? Well, what we're going to try and communicate today to you is no, you shouldn't worry about it, because worrying by itself does nothing. If we just sat there, and there's a lot we could worry about, and with your finances, with the world, with our lives, right? And we could just sit here and choose to worry, but worrying is not going to do anything for us. It's not going to help us. So should you worry about any of this? No. What we're not saying is, well, then just throw your hands up, put your head in the sand, whatever, choose whatever saying you want. We're not saying don't look at it, don't address the potential risk. That's not what we're saying at all. But worrying is just going to make you miserable. I could go back 10 years, Mark. I mean, I'm sure you're the same. I could go back 10 years to when I got into business, how many things the financial media was telling us that we should worry about.
Oh, yeah.
And how many of those things actually happened? How many of those things caused the market to go down, temporarily, permanently? Well, none of them have been permanent. The market's done, it's gone up, from that time to now. But the truth is, a very small percentage of the things that we worry about actually happen. But nevertheless, people continue to worry. I'm going to throw some stats out here. And just in general, talking about retirement, if you can believe this, a new survey says nearly 40% of Americans actually fear retirement more than death. 41% of Americans say it's going to take a miracle to be ready for retirement. Another study, 87% of people fear not having enough income in retirement. The second biggest fear is losing health insurance. People worry about a lot of things. So I think what I hope that everyone gets out of this episode is that there are some things that are concerns. There are some things that we maybe have to understand. There's risk when it comes to some of these issues that we're going to dive into today. But I really want to counsel the listeners out there that are struggling or that worry about things, because like we said, that's not going to do anything for you. And if we're about anything, the whole tagline of the Retirement Power Hour is to help people invest wiser and retire better. And retiring better, one of the things that means is retiring with less stress, retiring with a better quality of life. And Mark, we talk about it all the time. Retirement's not always about just having enough money, and doing financial projections. It's about a lot more than that.
Yeah, I would say 60 to 70% of the conversations that I have with people are not about money when it comes to retirement. It's about lifestyle. It's about staying sharp mentally, staying sharp physically. I mean, it doesn't do you a lot of good to have a couple $1 million at 65 and die at 67 because you're miserable, right? So having a successful retirement goes well beyond having finances. Now, we know that to retire and shut off an income stream, you got to have the money to do that. And we're going to talk about some of those things today. But again, proper planning, giving you some ideas of what's out there, giving you some clarity will help with all these things. We're not just sitting up here beating our chest saying, don't worry. We're going to give you some things that you can think through. It's not like you're my 8-year-old because I said so, don't worry, right? We're going to give you some reasons why you shouldn't today. And we'll jump into those topics.
Yeah, exactly. It's not like take my word for it, right? Yeah. So plan, but don't worry. I said it at the end of the last show, plan, but don't worry. So let's jump into the first one. So should you worry about running out of money?
That's probably the number one question for everybody that I face, a new client that comes in and meets. I don't want to run. Do I have enough to live the rest of my life? So it's probably the number one concern people have. And it's a very valid concern. Again, you're cutting off your income stream that you've done for 35 or 40 years. And now you're down to just basically Social Security at that point. So it's a valid concern. So one way not to worry about it is sit down and create a plan. And a plan is very intricate. There's a lot that goes into it. How much do you have? How much do you need on a monthly basis? You need to sit down spend some time going through your budget. And then, not to sell us or sell anybody, but get a financial advisor, get a counselor that can help you and coach you with your behavior through these types of things and open your eyes to things maybe you're not aware of, because that, again, that sounding board will help reduce the anxiety. You're not out on an island on your own.
Yeah. And I've told people this too. I mean, I just had this conversation, I think last week, but say it all the time. There's always a way to make it work. If you put a plan together,
Oh yeah,
I can tell you how to make it work.
yep.
It might not be the answer you want, but
That's right.
if you start with a plan, we can figure out how to make it work. And commonly there's just a couple things. There's, a few different levers that you can adjust and you can make it work. Now, one of those is rate of return, but that's not really in our control. We have influence over that, but I can't just put in a financial plan or retirement plan that is, coming up short, that's projected to come up short. I can't just change the assumed rate of return from 5% to 12% just because I want to bridge the gap. It doesn't work that way. So there's things in our control, and the levers that we can control might be how long you work. That's something you can control. Now, if you do a plan, and a lot of people are like this, I think they might be afraid of what the plan is going to say or what the projections are going to show. Well, it's no different medically. If I'm afraid to go to the doctor because I'm afraid to see what the blood test shows, well, we know that the doctor's not going to be able to help you. And if there's something wrong, wouldn't you rather know sooner than later? And again, some people are so afraid. Obviously, almost 40% of people are more afraid about retirement than death. So more people, according to that statistic, are avoiding this, getting this analysis done because they probably have a good idea of what it's going to show. But a lot of people that I've worked with have been surprised in that.
I was just gonna say I would disagree with you on that. Those people aren't prepared, just because of the fact that most people that come in, you just said it there too, they are concerned, but they're overly concerned, and a lot of times for no reason, right? They walk out like, holy cow, I am better off than I thought. And a lot of that comes with comparing yourself to your neighbor, or you're talking to your uncle or whatever, and getting some maybe information that doesn't apply to you. But
correct.
I'd say those 40% are concerned. I'd say a good chunk of them will be fine.
Exactly.
It just comes in meeting. So but the procrastination that takes place in financial planning, along with just about everything in as a human, can really be a detriment to you. Sometimes we do have people that come in and it is too late. And then the only choice is to say, hey, you're going to have to keep working, or you're going to have to spend less, or you have to die sooner, right? That's the one we can't control. But the reality of it is, you catch me 5 years or 10 years before that, we can start molding and shaping some behaviors from a saving standpoint, reducing spending standpoint, maybe paying off some debt that can really 100%. Drastically change the situation.
100%. Yeah. Two things you said there. Number one, I was saying you could work longer or you could spend less. That's something very much in our control, how much we're going to spend. Everyone, we need something to live, but I've met with enough clients where I've seen people make it work on not very much. And so we all have control over that. It might not be, again, the answer we want to hear, but we do have control. Another thing is, when we say how long you work, it doesn't mean working full time. It might mean making some part-time income, but work longer, spend less. We don't know how long you're going to live. So that's not really in our control. We have to sort of plan for, quote, the worst. And then the last thing that you just said, Mark, was it goes back to that medical example. Okay. And this is probably more relevant to people listening. If someone had a bad medical condition, okay, like cancer, and but they're going and getting regular screenings, and they catch it earlier, skin cancer, whatever, they get regular screenings and they catch it early, and the doctor says, oh, well, yeah, we'll just remove that and we'll see if it spread anywhere else. And then they find out, no, it didn't. We caught it early. We got it all out. You're fine. In the financial world, if you wait and wait and wait and wait, to evaluate your situation and there is something wrong, it's like waiting until that cancer is at stage 4 terminal before you do anything. And at that point, there's hardly anything you can do. Right. But if I have 20 years to retirement, 15 years, or excuse me, let's say you're at retirement, but you got 20, 25 years to live, to your life expectancy. Again, we don't know how long you're going to live. If the projections ever show that maybe you are short, maybe you thought you were fine, but you are short, well, then you can make that incremental change over those next 20 years. You can make incremental changes similar to when you're trying to save for retirement. When you start saving younger, you can just save a little bit every year, increase it a little bit every year. But if you wait till you're 50 and you want to retire at 65 and you haven't saved anything, you're going to have to save a ton. The changes are going to be enormous that are required. And often you can't even do enough. And like I said, if you're retired and you're 80 years old and you've never done a plan and you got 50,000 left in the portfolio, there's just not a lot. There's not a lot that can be done at that point, and it might take a drastic change. Yep. Especially if you're only living on Social Security. But that's one of the things to remember too. Should you worry about running out of money, Mark? Well, if your portfolio goes to zero, are most people ever really out of money?
Well, absolutely not. I mean, right now, as it stands, most Americans are getting between $20,000 and $40,000 a year in Social Security benefits, right? So, no, I have this conversation at times with people who their plan says they might run out of money in their late 90s or mid 90s, and that kind of gets you feeling not so great. But let's be real, when you get to your mid to late 80s, you've made it through life. You're not going a lot anyway. And if your portfolio assets have been drawn down to zero, it's likely that you're still living in a home that's paid off, that's worth something, right? And you still have Social Security benefits coming in. And we have a number of our clients that are in their late 80s that have a hard time spending their Social Security on a monthly basis, right? They just don't do a whole lot. So, still a significant benefit that people are able to get that they don't have to draw down from the portfolio. So no, by any means, or not out of money.
Or they might have a pension. They might have annuity income that's coming in that's guaranteed for life. So you always have those income streams coming in. You might only have Social Security, but you might have others. But that's a good segue into our next question. Should you worry about Social Security? Well, I'll throw out some information about that. And this is all accessible to everybody. If you just go on and look at the most recent Social Security Trustees report, what does it say? Because as we talk about this, should you worry about all of these things? Well, we can first identify, is there any reason to worry? Some people are worried about things where there doesn't seem to be a lot of evidence to worry. Social Security might be a little bit different. Social Security is in a dire situation. It's 13 years away from insolvency, according to the most recent trustees report. That means, and when you combine the reserve funds from the old age fund and the disability fund, it looks like those reserves will be exhausted by 2034. At that time, that means there would be a 22% cut across the board in all Social Security benefits. So this is a big if no changes are made to the system, and we've done prior presentations on ways to fix Social Security. There's a lot of things that can be done. Lawmakers need to come together. But is this something that people should worry about, and how do you combat the fear of this?
Yeah, and not to be redundant, but if our clients are listening, they've heard us say this a lot of times, but I think it's important just to understand, because it can be a complex issue, and it's a very talked about issue. From Social Security comes from really two sources. It comes from that trust fund, right? They're pulling money out of the trust fund to give you some of your benefits. You're taking Social Security, but 78% of those benefits come from the younger class putting money in, like Joe and I and everybody else that's not taking Social Security right now, that's making a paycheck, is paying Social Security tax. So getting back to Joe's 22%, what Joe and I and the young generation that are putting into the system is supplying 78% of a retiree's benefit. The other 22% comes from the trust fund. So, oh my God, Social Security is going bankrupt. We're not going to get any money. No. In 2034, if it becomes insolvent, no changes are made, the piggy bank's empty, right? But you're still going to have the younger generation paying Social Security tax. So we can still maintain that 78% benefit, or 78 cents on every dollar you're supposed to get. So yeah, that's not great, but it's not doomsday as it may be perceived in the media, or maybe other advisors trying to sell you something. But the reality of it is, if you want to plan for these types of things with all of our clients, they know we take a 75% viewpoint on Social Security. So we take a 25% reduction in the planning.
Yeah.
Right.
We can see it we can look at it as a what if it gets cut by 75%? What if you get your full benefit? And I just started laughing when hearing you talk about this, because I don't want to say every, but many of the financial shows and things that are out there, all they're talking about is why you should worry about this, why you should worry about that. And that's the beauty of what we're doing, is it's counterintuitive. This podcast, we designed it, and I started this with our clients in mind, which is a total opposite. I don't want our clients to worry. I'm not, and again, like we said, we're not saying, don't worry about it and just don't do anything. But people do that, like you said, to sell you a product or sell you on something. They want you to worry because fear is a motivator. Okay. Well, let fear motivate you to just, again, take action and get a plan. And if Social Security is a concern, like you and I talked, Mark, many times, and what we do for clients, you can put that in your plan. We can plan for the worst case or a subpar scenario. So even on a cost of living adjustment, when I'm entering that to a plan, even though historical inflation might have been 2.8, 2.7%, maybe we'll use 1%, maybe we use 1.5. That's just to hedge. Maybe, if we're not getting the increases that we have received historically. Those are ways, starting the benefit at only 75% of what Social Security is telling you you're going to get. Those are things you can do. Can you change Social Security? No. You can raise your voice and do all that and talk to your politician. You can't change Social Security single-handedly. So should you worry about it? No, you shouldn't worry about it. You should plan. You should plan accordingly, the best you can, and plan for the potential that it should, or that it could get cut. And that might mean a number of different things. Everyone's in a different position. Hopefully you listen to this sooner than later, earlier on in your retirement journey, because then you'll have more options. But should you worry about it? No, not really. What are you going to do? What's worrying going to do? And there's not really much you can do to change that situation. Then we go into the stock market, Mark. Another one. Should you worry about the stock market?
Well, it sure doesn't make a lot of sense, because nobody knows what that thing's going to do on a day-to-day basis. So again, another valid concern. But, I'll use the analogy. If I was going to go on a trip and I was going to try to make it down to Carbondale in 2 hours, right? Well, if I'm concerned about traffic and worried about traffic, and I leave 2 hours before the time I got to be there, if there's traffic, I'm going to be late, right? Well, if I'm worried about it, maybe I should leave 2 hours and 30 minutes prior. That alleviate my concern. So planning and having taken the approach of maybe a conservative look, or maybe assuming that something might happen that you're worried for, will help you with that ease. It happens from time to time. I always know what's going on in the media, one, because I listen, but I know that the client questions, right?
Right.
What about inflation? What about Social Security? And it's very, very gratifying to be able to say, you know what? Yeah, I know there's some concern about inflation right now, but we've accounted for that in your plan. I know there's concerns about Social Security right now. We've accounted for that in your plan. So if they do that, our clients are going to make it. Right?
So this was interesting. I looked up some stats on this as well. 72% of millennials worry about a stock market crash.
That's unbelievable.
Compared to only 56% of Gen Xers and 55% of baby boomers.
So 72 out of every 100 millennials is day trading? Right?
That's
That's amazing.
that's a stat we just pulled off of magnifymoney.com. It's a blog. 72% of millennials worrying about a crash. But over half of it looks like just about every generation is worried about a stock market crash. Women tend to worry a bit more than men. 63% of women versus 53% of men are worry about making a mistake. So it's not really the stock market, but making a mistake with their investments. That's probably because men are overconfident.
Sure.
And only 44% of women have investment accounts versus 60% of men. When it comes to investing in the stock market, and should you worry about the stock market? Well, of course, there are volatile times in the market. If you don't have a plan and you don't have an investment strategy that has been thought out, I can see good reason to worry, because you don't know where you're at. You don't know where you're heading. You don't know what to expect. There's no rhyme or reason for how you're invested the way that you are. So I can see why people worry. I mean, if you put me in an environment where I don't know anything about that environment, there's a lot of unknowns. Chances are, if it's foreign to me and there's risk, chances are I'm probably going to be worried. Think back, I mean, even COVID at the beginning of the pandemic, there were a lot more unknowns. Fear was probably at an all-time high in recent history. And a lot of people still are very worried. But with more information that's come out, the unknowns have decreased over time. And I think the worry has gone down as well. So should you worry about the stock market? Well, you should understand, the fundamentals of investing, and that is the stock market is going to go up and down. It fluctuates a lot. And our philosophy, which maybe we'll cover on an entirely different podcast, but our philosophy is you only want to invest in certain types of investments that are designed for the period of time that you're looking to invest for. So, we talk about stocks. Those are, we think, a great long-term investment. They're not a great short-term investment in our mind.
Yeah. Like I said earlier, it was kind of tongue in cheek, but if I was day trading or worried about what the market was going to do tomorrow, I would be concerned about the market on a daily basis. But as you're saying, Joe, we know that if you have a plan in place and you're investing money and it's long-term, 10 plus years where you're not going to touch this money,
right?
I don't get concerned about what the market's doing today, next month, next year. Now, if I need money next month to live off of, or if I'm going to put a down payment on the house in 6 months, or I'm planning on giving my kids money in the next 6 months, guess what? That money shouldn't be in stocks.
It shouldn't be in stocks.
Right.
And then you wouldn't worry about it. And I tell people all the time, on the flip side, is cash a good investment? And when I bring people in the office and they, sit across the table from me, I say, is cash a good investment? And a lot of people start to say, no, it's probably not. And I say, well, no, it's not that it's a bad investment. It's a bad long-term investment.
Yeah.
It's a great short-term investment. Right. You put 10 grand in the bank and you're going to need it in a month for a down payment or whatever. When you go back to get your 10 grand, are you upset whatsoever that it hasn't grown 10% in that month? No,
absolutely not.
No one thinks about that. They're just happy that it's there. They're happy they could go get it without any hassle. They run up to the bank, they take it out. They're not worried about the growth of the money. And that is the definition of a short-term bucket, short-term money. Short-term money, the focus is not growth. The focus is safety, accessibility. Long-term money, long-term buckets, the focus is growth. And safety is always a concern, but it's like we tell people, when you evaluate the investment, you should evaluate it over the period of time that you're investing for. So if I'm saying that stocks are a 10 plus year investment, why would I evaluate stocks on a 1 week time frame or a 1 month or a 1 quarter or 1 year? We're saying, no, they're not designed for that. So when you go to evaluate it, it should be the same. So should you worry about it? No, but you should make sure you have enough money in that first bucket, the short term. We use the 3 bucketing strategy: the short term, the midterm, and the long term. If you have enough money in the right investments that are designed for the short term and enough that are designed for the midterm based on what you're going to need, then you don't need to worry about that long term. And there is a little bit of faith here, faith that people will continue to innovate and create products and services that other people will want to buy. There's a little faith in the system of how we do things. It's not saying we're not going to have any dire situations, but it's just a little faith that in the long run, the market is going to keep climbing the mountain that it has been for the last 100+ years.
Right.
And it's going to keep going up despite these short-term blips that occur, because we have bad events like COVID, but then we have innovations that come out of it, and businesses create things that other people want and need. And that's what the stock market really is. So there's a faith in that's going to continue. Like I've told people, Mark, if we're advisors, but we're also business owners. And if for some reason something happened that we could not conduct business the way that you and I do, we're not just going to crawl in bed and cry and
right. Got to find a way.
Then we'd have to pivot. We'd have to figure out a way to alter our service or come up with something new or use our expertise or whatever to bring something to the table again that people would want, need. And that goes for, look at Amazon. Look, Amazon, I can order a package. The logistical component of Amazon, the fact that I can order something and a lot of times it's next day, but that people can do that on a mass scale. People are smart, people are, they have initiative. They can figure stuff out. And it's not even having faith in the market. When you say I got faith in the market, it's just having faith in people to figure out solutions to problems. And we're obviously big believers in that.
But again, don't worry about the market. Now, the reason you don't worry about the market because you have a plan that's built for you. How much volatility, because you will have volatility when you're in the stock market.
Right.
You know how much you can handle. But again, building that plan out for yourself will help you not to worry when times say you could worry.
And I had a client the other day, and it was a great moment because we went over her and her husband's plan. And then we use the plan to figure out, when we talk a little bit, I'm giving a preview of the buckets, but we use the plan to determine how much needs to go in the first bucket. Well, again, it depends on your plan. How much are you going to need in the next 12 months? How much are you going to need in the next 2 to 9 years? That determines what goes in those first 2 buckets. And she said, well, now that I've seen this, it makes me wonder, how could anyone ever figure out how their allocation should be set up if they haven't done the plan first? And I'm like,
because their plumber said they should be 60-40.
Right. I'm like, you hit it on the head. I don't know. You can't figure it out accurately. You use a rule of thumb, or someone, like you said, someone said something.
Yeah.
Sorry
to all you plumbers out there. It was just a reference.
Should you worry about the fear of government or politics or a certain political party?
You don't get this question at all, do you?
We get it all. I would say not all the time, but get it a lot.
Yeah, a lot.
We haven't got it a lot lately because
it's
not we haven't been in an election year, which now we are in a midterm election year.
Right.
And I'm sure we'll hear about this more and more and more over the coming months. And then 2024 is the next presidential election year. But we did a presentation on this, and you can actually go back and view that. But during the 2020 or right before the 2020 election. And should you worry about this? Well, it's always about 50-50. Shocker. 50% of people are worried if this party gets in power. 50% of people are worried if that party gets in power. But if you just evaluate the stock market and you look and see how it's done over, again, decades and decades and decades, you actually find that there's not a lot of difference, and the stock market really doesn't care who's in power. They just really don't care, the market, about who, if the president's a Republican or a Democrat, or if it's a split Congress versus, all Democrat, all Republican. There have been differences in returns, but for the most part, the market has done very well in all those environments. So according to an article on Forbes, and this was done in, this article was published, I'll get a date for you, January of 2021. So according to this article, in the 75 years since the end of World War II, the Dow Jones has averaged about 8.3% per year. Since then, Republicans have held the White House 53% of the time, 47% of the time for Democrats. Democrats have controlled the Senate and the House 63 and 68% of the time, respectively. So control of the presidency, Senate, and House has been a little bit more rare. But during this period, Democrats had complete control 28% of the time compared to 10% for Republicans. And again, you look at the returns, the average was 8.3% in the market over that period of time. The highest was when we had a split Congress. We got the best returns from 1946 to 2020. We got a 12.9%. So it would appear the best returns come from a split Congress. But the worst returns when you had a Democratic Senate and Republican presidency, a Republican House, the market averaged 6.3%. When you had total Democrat control, the market averaged 6.7%. When you had a Democratic House but Republican Senate and presidency, the market averaged 7%. And all of the rest of the combinations just go up from there. So the average of all of that was 8.3%. So is that really, in my mind, I'm thinking, is that really a cause to worry about who's going to get elected?
I will say this. I would say most of the time, I think people are concerned about events like this, political events. It's not because they think that if so-and-so gets elected, I'm going to get an 8% rate of return. But if so-and-so got elected, I get a 10% rate of return. They're not fearful of getting a lesser return. They're fearful of the market going down, right? They're fearful of somebody getting elected that they don't want to get elected, with different values of how to run our government, and the market's going to go down. But I would revert back to this. If we're concerned about the market going down for a short period of time, the stock market, right? The equity market going down for a short period of time, we don't have a good planning long-term focused, because I don't care if you're 81 years old, you're in retirement, you need $3,000 a month. If the person you want to get elected doesn't get elected and the stock market goes down like this, and you were planning on pulling money from your stocks that year anyway,
right.
you were in the wrong, right?
No, I saw articles like that in 2020 where the market went down, and there were articles about, well, what are retirees going to do? The market's down. And I'm thinking, if a retiree is pulling from stocks and selling on a month, this was like a month in.
Yeah.
If they're selling from stocks for income, then again, that violates our philosophy and not protecting the short run and the short term and the midterm. Yeah. That's not a good plan.
But again, if you're a market timing person, you're trying to make money in the market, and that's what your job is. Would an election concern you? Yeah, it concerned me too if I was worried about what stocks are going to do over the next 3 or 4 months, right? But you're going to live a life of worry, living that up and down, that type of volatility. And the people we work with, the people that want the retirement planning, and the people that need that type of planning, aren't investing for a 3-month period of time, or 6-month, or 2-year period of time.
Yeah, perspective is huge.
Yes.
And again, a lot of the things that we share, it's a Google search away. You can go figure out, like this Forbes article that talks about this. Anyone can go out and get this, and look at this same data, and we'll include it in the show notes. But anyone can go out and find this information. So there might be a slight nod to one party over the other. Of course, but it's very, very close. And when you say that, you say that to a Republican, you say, well, actually the market's done fine when Democrats have been in power. And they're like, no way, that can't be. You say it to a Democrat and they're like, well, actually, when Republicans have been in power, the market's done fine. They're like, that's impossible. That can't be. We get too caught up in it. We Absolutely. Get too caught up. And you made a great point, off air. And that's, the Democrats and Republicans, for the most part, I think they kind of all want the market to do well. I mean,
It
I don't
doesn't
think
benefit any of them for us to have a
it doesn't.
declining market for 4
No,
years while they're in office, right? The way they go
I
about it,
wouldn't think so.
no, the way they go about it may not vibe with your personal preference, your political preference, but they think they're doing, both parties, what they need to do to drive our economy and drive markets. That's the reality. So
Right.
you just gotta, again, sometimes look at it from a big picture and not get so micro oriented on it. But for those of the people that want to worry, they'll just keep diving in and keep wanting to worry. We're just trying to give you ways to help you to not
Yeah.
have to worry and to not live that life that we know is not enjoyable.
And I haven't heard this from any other financial advisor, definitely no other show telling people don't worry. Again, we're not saying don't worry, we're not saying don't do anything.
Right.
We're saying plan.
Yep.
But don't worry. Because your quality of life is just as or more important than how much money is shown on your statement, at the end of the month. And we're just telling you why there is a cause for concern, why some people, like in this case, Mark, I would say there's no good reason to worry about this, even from an analytical or a historical standpoint. It's a total myth that you should worry about this party or that party. There's
Absolutely
literally no reason to worry. We don't think you should worry about any of this stuff. We think you should plan. There's no evidence that even suggests that you should worry. Some of this stuff, in like the stock market, in the long run, there's no evidence that suggests you should worry about the stock market. Whenever, I tell people this, today is February 7th, 2022. I remember when I got into the business, the Dow Jones and of course all the media pundits saying that you should worry about the next big stock market crash. We were about 4 years after the global financial crisis, and I remember everyone saying how you should worry. I remember there was a gentleman, I don't remember who it was at this point, but he was a voice of reason during that time, and he basically said, we're going to get to 20,000 in the market before we have another crash. Everyone else is saying we're going to have a crash.
right.
And he's saying, no, we're going to get to 20,000 in the Dow Jones. Now, the Dow Jones, when I first started in the industry, was around 12,600. And that was about 10 years ago, just over 10 years ago. You look today, it's over 35,000.
Yep.
And that guy was right. The market didn't decline until it not only got to 20,000, it got far above 20,000 before it had the major decline of 2020. It was over 28,000 at that point.
Yeah.
So I would say that's not even a logical reason to worry. We know in the long run, in the long run, you gotta differentiate between the short run and the long run.
In the long run.
So inflation, should you worry about inflation in 2021? The numbers came out. Inflation reached a 39-year high, and inflation was up nearly 7% in 2021. We haven't seen inflation like that, obviously, for a very long time, 39 years, but going back to 1982, the largest 12-month gain since June of 1982.
Yeah, 82 was 6.2%. 81 was 10.3%. In 1980, it was 13.5% inflation. So it's been a long time since we've been. I mean, that's 13.5. That's double where we are today. So, I'm having conversations about inflation right now with people as well, and it doesn't feel good to go spend more on gas, and it doesn't feel good to go spend more at the grocery store. Are we going to go through a long periods of this inflation? I don't know.
But you can't control it.
Can't control it.
So what do you do?
Yeah. Well, can I say it? You plan for it, right? You plan for it. The reality of it is the more inflation we have, the more people need to be able to deal with volatility, right? Just last year, cash, it becomes a major risk. You're sitting on cash all of last year, and inflation was at 5.9%. Yeah, you lost a little bit of spending power right now. Again, I'm not telling people to get out of cash. Your cash is cash for a reason. But if you're sitting on cash for 10, 15 years, and we have inflation running over 3 or 4%. That's a lot of money to lose as spending power on an annual basis. Now,
Right.
what's a great way to hedge inflation? Equities have always been. The net return on the S&P 500 going way back to the 1920, 30s is like 8.3%, right? Net inflation. So again, S&P just right around 12, inflation running right around 3 or 4, 3.1, 3.2, 3.3, somewhere like that. You're just over 8%. So equities will hedge inflation.
It's the
So,
best in our view. It's one of the best ways.
yep.
And we don't know what the effects of inflation or how quick it will come, how severe it will be. But what do we know? How do you combat it? Again, should you worry about it? No, we already know it's not going to help. But are there things you could do? And this is an area where absolutely there are things you could do. And one of those things, like you said, you can't leave enormous amounts of money in cash and think that you're going to protect against inflation. You're not going to. It's a near guarantee, especially with interest rates as low as they are. It's a guarantee that you're going to lose money.
Yep.
So if you want to hedge inflation, you have to set up your investments properly, and stocks are a great way. Even in bonds, people think they know how to slice up stocks into different categories, Mark, but with bonds, it's like, aren't all bonds the same? A lot of people, they just don't have as deep of an understanding because we're always talking about the stock market. But with bonds, you need to slice up your bond portfolio as well. You need to have some that are going to react better to inflation. You need to have some that will react better if we see spikes in interest rates. You need to have some that will react better if we don't have inflation and interest rates stay low. It's
Right.
called diversification.
Yep.
And we get it with stocks. People don't get it with bonds because they don't know as much about bonds, but you have to have it with both.
Yep.
So you shouldn't worry. There are ways to combat it. They're pretty simple. And it's the things where if I said, don't put all your eggs in one basket, don't you think, Mark, everybody like, yeah, I know. Like, I get that. You're not telling me anything new, but yet we have people doing that. Not us, but we have people in society, in the world, doing that because they put a bunch of money, all their money, in cash in the bank because they're too afraid. They think they're protecting against their biggest risk, the stock market, but they're not protecting against what could be a big risk with inflation. So
yeah, if you went a year and we're down 6% in the stock market, you wouldn't be real happy. Well, being in cash for a year that you didn't need to be within cash, you lost 6%. The reality of it is everything has a balance. 6% inflation this year, but let's look at some of the positives, right? People got a 5.9% raise in Social Security. That's a good thing, right? We look back to 2014 and 15, and inflation ran just at 1%, just 0.8%, right? So things tend to work themselves out,
Right.
but it's all about your mindset. And not to get too philosophical, it's all about your mindset. There isn't one silver bullet. You can't not worry about, you can't not deal with inflation, not be in the market, right? Not cost of living adjustments being there, not worry about the bond environment. You can't not do it all. So like Joe said, diversification, you have to, when you build your plan in a way that fits you, yeah, inflation's out there, but we got ways to hedge it. Yeah, market volatility's out there, but we got ways to hedge that with cash. Yeah, you have to deal with interest rate environment and bond yields, but we got ways to hedge that. And again, I wish there was a silver bullet. We have to, deal with any of this stuff, but unfortunately there's not. And good diversification and problem solving will help you build a plan that you can mitigate some of those risks.
And planning, and it's the same thing. And I'll hit this one real quick, but should you worry about taxes? Should you worry about taxes? Assumably that means taxes going up. Well, again, you can. It's not going to do anything if you worry about it. Diversification is, again, the best way to hedge the risk of taxes going up. We're in a relatively low tax environment today compared to historical tax rates. So, but again, we're not saying for everyone to go put all of your money in a Roth IRA, or all your money in a 401k and just pay a bunch of tax now, because again, it's a case by case thing, but diversification, if you had a blank slate, we'd love to see money in different types of taxable buckets, Roth, traditional, and then, just a pure taxable bucket potentially, because we just don't know. So having a little bit of a diversification so there are things you could do, even if you're retired and you can't contribute anymore because you're not making any income. You can do Roth conversions potentially, which is something that we do look at with our clients to see if it makes sense. Some it makes more sense than others, but there are things that you can do. So don't worry about it. Just take action, take some steps, talk to someone that knows about this stuff and can help you. Long-term care, should you worry about long-term care? Well, 62% of people said that they are moderately worried about it, about not being able to pay for it. And the statistics show that there is a cause to potentially have that as a concern because it is expensive. A fair amount of people will need long-term care in some form, whether it's assisted living or home care or nursing care. But the thing that I want to point out is, again, we take action. You're not going to be able to figure that out by yourself, but you need to at least start down that plan. I could sit here and I could worry about it and I could do nothing, or I just start to figure out and ask myself some questions of how much is it going to cost me? How long might I be in a long-term care facility? How much money would that require? And we have a process of just showing that immediately to see what does the average long-term care stay do to your financial life.
Right.
And some people, as you know, Mark, we show them, well, here's the average long-term care stay at the average age, the average duration, the average cost. And here's what it would do if you had to pay for it out of pocket. And some people, when they see the result, they feel like, oh, I guess I don't have to worry about that.
Right.
Right.
Again, planning and clarity.
And when we say planning too, that it's the way you go about it. And obviously we're biased, but our financial planning software, it's visual. A lot of people are visual. Yep. So when you click the button, what if inflation happens? What if growth rates aren't as good? What if Social Security gets cut? And you can click the button and then boom, you see what the result is. It will tell you right there, should I be concerned about this? And the beautiful thing is a lot of times we click those buttons on those bad things and people are like, oh, well, this really is not as big of a concern as I thought it would be. And other times we click other things and they're like, that's a bigger concern than I thought it would be. Yep. But it's usually not the things they're worried about. It's right. In my experience going through this, usually nothing or something like living expenses where, just a little bit of a change in living expenses on a regular basis, something that's going to be with you forever. It can make a big difference.
Yep.
The last one, Mark, should you worry about the fear of a purposeless retirement? And this is really not financial, but I'll let you explain this a little bit.
So I would say, is this a valid worry? Absolutely it is. It's something that should cross your mind. This is a conversation we have with everybody that's entering retirement. And a lot of those who are in retirement, because this is a big concern. So many people get wrapped up in, do I have enough money? And is my nest egg big enough? Is my money going to last? But they don't put a lot of time and effort into planning for their livelihood, their mental well-being, their physical well-being. And we stress this and talk about this a ton. So with a plan, is there a reason to worry? No. If you're excited to wake up and do something every day that you're passionate about, what's there to worry about? Now, the problem is, I think a lot of people, they've been grinding, right, for 30, 35, 40 years, working, doing the same thing. And now they're concerned about, well, now what am I going to do? Again, very valid. So I would tell you, you should create a plan, take some time, sit down, think, ponder, what is important to you? Find those most important things in your life, whether it's your family, whether it's your health, whether it's traveling, whether it's your charity, whether it's your church, and create a plan to fulfill a purpose in that area of your life. Joe and I were talking again offline today, and health is important to me. But you know what? It's probably not number one on my list when I have 5 kids at home and a business to run and clients to see. So I do make a point to work out, but I don't schedule my life around my workouts. I schedule
Right.
my workouts around everything else. Well, if I was entering retirement tomorrow, my kids were out of the house and I wasn't working and I wasn't running a business, I wasn't reporting to clients. Gosh, at 66, 67 years old, health's pretty important because I want to live a long time. That'd probably be the first thing I scheduled every day. And then
Yeah.
second would be, the church I'm at or the community group I'm a part of. And I think it's just very important to create a plan in that area, sit down, think about it, and then just make sure that you're doing those things. And if you have those things, do you need to be worried about your fulfillment? No, because you will be fulfilling the things you need to do and want to do in your retirement. You'll really enjoy it.
Right.
Without a plan, sure be easy to sleep till 10 o'clock every day, wake up, turn on the news, put some bad information in,
Oh,
be
man.
worried about your money, right? Worried about your health and go to bed. That seems miserable to me.
Right.
And I think most people. So just create a plan and there's no need to worry about it because you'll have a purpose.
It's easier. And I get that it's easier said than done. But as I say to a lot of clients, take all the worry and stress you have and multiply it by 350, or whatever.
Yeah.
That's not an exact number of how many clients that we have, but
Right.
and that changes obviously all the time. But that's kind of how we feel because we're responsible for, a few hundred households, and it's typically their life savings. And
Absolutely.
it's typically, what I'll call normal people that have just done a very good job saving. And even a gentleman I just talked to, he said, well, if something happens to the first 800,000, what happens, where's the next 800,000 going to come from when I'm already retired, and I'm not working anymore? His point was, this is all I got.
Yep.
And that's true. And so we get that. We totally get that. But you could choose to worry about a never ending list of things.
Oh yeah.
And so this, again, I know we can say it, and we're not licensed counselors or psychologists. So there's probably a better way to go about doing this, because we say it 100 times. That might not be the best approach, but we're here to tell you, as people that do the planning, that work with people every day, you just do what you can do. You control what you can control, and then you put it to rest, and you just live your life. And there's got to be a little discipline. There's got to be a little internal fortitude to say, hey, I might need to adjust. But whatever happens, I think is within the realm of I'll be fine. As I said on the last show, there's predictions about 2022. But I'm predicting that regardless of what happens, good or bad, most of us are going to get through the year. Most of us are going to be just fine. Most of us out there that are worried about financial things, most of us are going to be just fine.
Yep.
And a lot of the things we're worried about are probably not going to happen. They're probably not going to happen to the extent that we think they're going to happen or affect us. So as I've said in football, I don't fully, so maybe if you come from a farm background, you'll get this one, but we'd practice in football 3 days, I think, basically 3 days in a walkthrough. And when you got to the walkthrough, my coach used to say, well, it's Thursday. Thursday's over. Friday, you're just doing the walkthrough. When Thursday gets over, the hay's in the barn. And that just basically meant we've prepared. There's nothing else. We have no more practice time. The preparation is done. And whatever happens is going to happen during the game, right? Yep. Basically, that's speaking of preparation, but it's kind of also speaking about your mentality. And should you worry? There's no reason worrying. It is what it is. Hay's in the barn. Yep. And you go into your financial plan, you get everything in there, you address all the risks and concerns and make the best decision with, maybe with the help of an advisor. And you know what? The hay's in the barn. There's not from there. You just wake up every day, choose to have a great day and roll with the punches, because at least you've done all you can do. You've done everything prudent to address things. So, well, this was a good topic, Mark. I appreciate you coming on, talking with me about this, and always good to get your input on topics like these when we're talking about retirement, because you deal with a lot of people in this phase, and so do I.
Absolutely.
Any final parting words of advice?
Yep. I think a thing that I've always known when I think about people, if you're worrying, that means you do care, right? You do care. I think the fault is to not do anything about it and continue to worry. So if it's a concern of yours right now, that means you're alert, your eyes are open, you want to prepare yourself, you want to protect you and your family. That's good. But to continue to worry and continue to have that concern for a long period of time, I'd caution you on that. And I'd advise you to get some help and sit down and create a plan.
Yeah, good advice. Well, everybody, with that, this is the end of episode 2, believe it or not. So we're on a roll here. Hopefully you're enjoying our topic so far. We're going to continue talking about things that help you invest wiser, retire better. We'll be back shortly. 1 to 2 episodes a month is our goal. We're figuring this out on the fly, but send us an email, send us some information. If you have suggestions, you can go to our website, which is www.CarsonAllaria.com, get more information about us and connect with us if there's anything that we can help you with. But if not, continue to stay tuned, share, follow, all that good stuff. And we will talk with all of you on the next show. Take care. We'll talk to you soon.